discuss more on that. And if you have anything to ask me, go ahead, interrupt, ask me questions. If you have anything to, you can unmute yourself and just write in the chat box and I'll answer. So I had made a presentation, or like let's say a deck on asset management industry, and I'll let you guys quickly go through it. I'll walk you through this thing, and after that we can have a discussion on that. And also I'll
Yes,
be sharing some details on this. So hopefully my screen is visible, right?
yes, it is.
So talking about the global and Indian asset management industry and how asset management is different from investment banking. Okay, so investment banking is more of sell side roles, which includes raising capital, underwriting deals and advice on mergers and acquisitions, where well as asset managers are basically on the buyer side. We
Right,
buy securities and build portfolios for our clients, or as an institution as a whole. So we don't have any client. Our client is basically NPS trust. Okay, so that we cater to the NPS trust. NPS trust represents all the
public.
pension holders, right?
Right,
Whoever invest in pensions. So we actually report to the NPS trust and not directly to the general public. Okay, so and what are the activities that we do? We buy and invest asset according to client mandate. So we have a huge portfolio, almost 4.5 lakh crore of money that we have to manage to invest, about to touch 5 trillion rupees going forward. And we have to make selection of securities, be it equity, government bonds, corporate bonds, right? We are moving into the alternative investment space as well, starting from REITs, INVITs, gold, silver. We'll start buying them as well. So a lot of changes are happening in the pension fund industry. So our mostly our activities, buying and investing in assets, just like how you build your portfolio, right? We also build a portfolio, but of institutional money.
right,
Okay, so that is the whole difference. With on a detail part, you basically select, how a mutual fund works, right? You invest in a mutual fund, and it, let's say, a multi-asset mutual fund. So consider, the NPS as a multi-asset mutual fund where you invest money, and money gets invested in across equity, debt, and corporate bonds
right,
and alternatives as well. Whereas activities in investment banking specializes in selling securities such as IPOs and bonds, and also offer advisory services to companies trying to raise money.
right,
So in asset management, it demands quantitative analysis and portfolio construction skills. Investment banking requires strong sales and deal making skills. Obviously, quantitative analysis and is also required, but mostly investment banking is more of on the softer side, where you have to work on your soft skills as well. And asset management is mostly, research, analysis, and quants part heavy, where you have to make active decisions on which securities to select, right?
right,
And being in the front office, with LIC, I get to meet a lot of people in the industry, especially, the our Indian side, people from, HDFC or DSP and Nippon, and
right,
get to, visit conferences being held by CRISIL. You can name it, any fund house. We have contacts with them, so we are basically at the forefront of it. Even having networking with people in NSC, SEBI. So anything can happen, and we always are in touch with each other. So that's how it works in the front office. Not We are not very much connected with outside foreign clients or foreign fund houses, or because we cater to the pension industry, and it
holders.
is mostly strictly limited to India.
Right,
So, but having prior experience of investment banking, where I used to work, with a US investment bank, there I got a lot of, networking on different people across different investment banks, from top tier to boutique investment firms, and got to know how their deal works and all. So, if you want to know more on how and let's say if you are still deciding where you want to go on the asset management side or the investment banking side. So at the end of this session, I'll share a link where you can schedule a call with me directly, and we can discuss and then decide that, given your background and your current trajectory of your experience and the education that you're pursuing, so what would be an ideal choice for you and where would you like to see yourself? Investment
Right.
banking looks good from the outside. It's difficult you to uh, stay invested in that if you're not really that passionate about investment banking, right? So my passion more lied on the portfolio construction, asset management. So when I was completing my CFA, I had realized that I would be more interested to continue my career in asset management than investment banking. So it looks good from the outside. It's difficult to get in. It is even more difficult to survive.
But
If you
isn't it the path through which we will get into asset management?
Not necessarily. It is one of the paths. You can get into sell side roles as well. From there, you can get into buy side. Okay. So see, they were trying to take people from sell side. So the natural progression is you join a asset management sell side role and then you move to the buy side role. While for me it was straight away jumping from investment banking to asset management. So the only thing that helped me was I had done a lot of my own research and analysis and how to do portfolio management and portfolio construction even with my own money. Okay, and I have made a lot of research. So when I discussed that with them and also laid out a plan that how LIC should at least some key points that they should be keeping in mind, and also had a fruitful discussion in the in our interview, and also the fact that always keep track of market related activities that is happening, right? So at the end of the day, what is required, even if you are a CA, FRM, doesn't matter if you don't have good market knowledge. If a candidate has, especially what I look into it, if a candidate has some basic qualification, okay, let's say a master's, and he has very good idea about market knowledge, so I would definitely recommend a candidate over a person who's just has a lot of degree but no market knowledge and all. So that I strongly believe in, and I always tell people to have a good understanding of what is happening in the market. It's um, it's good if you get good certifications like CACF, FRM, if you it's good. But my primary recommendation alongside that would be very well read on what is happening in the market, and where are the interest rates, where the macroeconomic factors going, where are markets headed, what does 6 months down the line look like for debt, equity, gold, if I ask you, and you can able to answer that. So
Yeah.
that would be a more positive than you just showing me that you have a CSAFA and you don't know anything what is happening in the industry. So that can get you to the interview table, but unlikely it will make you get hired. So uh, that I always tell anyone I meet and anyone I give advice to. And also, if you want to know more on how to get into core finance role, obviously you can schedule a call with me directly. At the end of this session, I'll share the link with you.
Sure.
So going forward, industry structure buy side, we invest capital on behalf of clients, and on the investment banking sell side, we originate and sell financial products basically. So the key players in buy side are asset management, mutual fund, pension funds, sovereign wealth funds, hedge funds, right? And in the sell side, investment bank, brokerage firm, dealers, that forms the sell side. Some of the leading, let's say, asset management firms in India and outside is, BlackRock, obviously,
Right.
has an AUM of more than 10 trillion. In India, SBI Mutual Fund, ICICI, HDFC, these are the top mutual fund that, holds retail people's money. I'm not getting into the pension fund side, but I'll more talk
Yeah.
on the mutual fund side. Okay. So these are the global players in the US and the Indian side. Okay. So what does the asset management process looks like? The life cycle of an asset management process. So first we have to understand the strategy formation. that we define the investment mandate with which asset class, what are the styles that we are going to follow. And we start, if you have a sell side, you start preparing offer documents, right? Then you go to the fundraising part. You then try to raise funds for your mutual fund or any kind of hedge fund that you have opened. So you try to raise money on based of that, and after that it is there, you try to construct the portfolio as per the decided mandate, whatever you have pitched to your investor. You have tried to construct a portfolio based on that, based on your analysis and building financial models. So again, building financial models and research is an inherent part of you being in any category of core finance role.
Finance.
Yeah, in general finance. So I had developed, I think, files on research reports and financial modeling. I think so, around 20 odd files are there covering different companies and financial models. I'll share the link. You can download it, and you can also practice it. It's editable. It's in Excel, so you can make it yourself. Use your name and then publish
Yeah,
it. And but obviously, try to upskill yourself on these parts of making research, doing modeling. Once you start doing that, you will understand that how much of knowledge and little nitty gritties that you need to understand in the market to be able to make one of those. So it's a hands-on approach, and it's good to know the theory, but it's even more important to understand the practical side of it as well.
right.
Then after portfolio construction, we look at the execution and rebalancing. Every month or quarter we do some rebalancing with the portfolio, and we compare our performance with the benchmark, right? And along with our peers, we compare with our peer performance as well, and that is what we report and communicate not only to the regulators but also to our investors. So type of asset management: mutual funds are there, pension funds, ETFs are there, hedge funds are there. In India it is now being called AIFs, alternative investment funds.
Even SIFs,
So
right?
yeah, SIF is there, AIFs is also there. So SIF and AIF.
Right.
So AIFs are mostly for high net worth individuals. SIF is mostly a watered down version of hedge funds, which is more applicable to retail investors, right? So what are the tools and strategies that you need in asset management? One is basically portfolio optimization. Okay, you need to understand how portfolio construction works. For that, CFA, doing CFA is a gold standard. You need to understand asset allocation and diversification. You need to know what each asset class means and how, what does it stand, and how does it play out in the overall context of the portfolio. Whether you want to take equity, what is equity, what are the types of equities that are available in the market across market cap or different industry. Fixed income, basically risk free fixed income asset class or risky fixed income asset class. Those are the things that you need to know at the very basic, right? And then risk management is, of course, there. You need to understand different risk parameters and how it affects your portfolio, and you need to be aware of the different sectors, macro indicators, the sentiment that are there, and basically use that for quantitative analysis. And ESG is not that prevalent in India, but around the globe it is more prevalent, that you understand what are the different environmental, social, or governance factor being followed by different funds or fund strategies. So, a role and day in the life of analyst and associate in the asset management industry. So, in the morning, you may review overnight news and market movements, and may update your models, if not daily, let's say weekly. In the midday meetings, you attend team meeting with senior management and sector analysts to discuss research findings. Analysts present new investment ideas or updates on existing holdings. Portfolio adjustments are executed based on inputs. Throughout
Right.
the day, the analysts conduct deep dive research on sectors, companies, builds models, write internal portfolio update. For that, they may use Bloomberg's, Excel, and often Python. And client and investor support: prepare presentation or slides that direct long summarize information for allocation and investment interactions. This applies to the sell side, client and investor support.
Right.
uh,
Uh,
and modeling and due diligence, accompany portfolio managers on calls or site visits, and interaction with the portfolio manager. You can execute trade as per PM instruction if you are a dealer, and handle
right.
settlement issues and maintain execution records. So these are the things that you have to do in a day-to-day life. Yes, ask me.
But yeah, I was saying, are you using any kind of AI related tools here in these daily
No,
processes?
see, it's a government job. So LIC is a government company. We are very much lacking behind in AI. I don't think also AI will come in the, in this decade as well. It might come from 2030 onwards. So for the next 5 years also, if I'm not sure whether it will come. And it is
Because
not.
because because I
Yeah.
had conversation with few of these like PMS managers. They
Mhm.
are looking to implement AI in places where, say, as when overnight news comes, they're trying to build models which can automatically update their financial models and come up with a outlook.
See, asset management is a very people heavy role. You can use AI to get news info, but to
Yeah,
incorporate that you need a person. So I
right.
am not on the site at this moment. That is especially in India, especially
Mm,
maybe US funds may do it in the next 2 3 years. Indian side may still take more than 5 6 years even now, because and it will be more used in other industries. Finance, I don't think so. So finance, Excel is still the king, and
mostly.
it is going to be the king going forward. So it is mostly on uh, AI can't decode that flexibly the way our minds decode how markets will work out and all. And the person who is carrying experience of 20 30 years in the market,
Right,
obviously that person is will keep making decisions. So quant strategies do work based on AI. It might work, but that would be only for short lived, before people started noticing its strategy and try to play it down. So it's
right,
only good for short term. In the long term, you always have to trust the experience and judgment of a portfolio manager who has been doing it for decades.
right.
So he knows the pulse of the market, which an AI can never know. So knowing the pulse of the market is very important. It's a feel, right? AI cannot feel anything. So that's how people with experience takes call on any stocks or bonds they would like to purchase.
So when you say pulse, you mean like the mode of the market, like mode of the
Yes, the
investors.
sentiment, the feel of the
Mm,
market. When you know that
understood.
even though indicators are suggesting that oil is
Mm,
going to go up, but you being in the industry, knowing how it works, you know that the ceasefire is going to happen and there is a higher chance oil will come down than go up. So
right.
AI can't do that kind of flexible analysis. It might do a very linear analysis that if oil price is going up, it will keep going up. So
Mm,
that kind of analysis is not very helpful in the long term.
understood.
And what are the skills and tools for a career in asset management? Obviously, certifications like CFA Gold Standard is preferred. Okay, you can also get MBA, but again, MBA will land you mostly on the sell side, not buy side. You have to make your and MBA also most of the roles goes into consulting, some into investment banking, and rarely into asset management. So CFA is
Right,
still the gold standard for it. CA CFA both. And of course you need to be very good with your macro financial modeling, financial research, any kind of quantitative analysis. Python R is a plus, not a necessity, but Excel is a must. You have to be very good in Excel, and you have to be have a good sense of good understanding of the soft skills while writing or having a word. Since we will be in front office, you have to interact with a lot of people. Basically, people who come to us are people who are trying to raise money, companies,
right.
institutions. So institutions like any bank, people from banks would come to raise money. People from different industries could come and start talking to you, pitch their company to you and ask for investment in their company in the form of equity or bonds. So you have to have good communication skills. You'll be meeting a lot of people, sharing your strategy and all, trying to know their strategy. So soft skills is also very very important.
Right.
Nothing as of such here. So yeah, That being said, couple of other points that I would like to discuss based on uh, how how the portfolio construction at happens at such a with
Large
such a
scale.
huge AUM.
Right.
So to see to be at the heart of it, it's a huge sum of money, but half of it goes to government bonds.
Right.
25% of it goes to equity and 25% into corporate bonds. In equity, we die, but our holdings are very close to what you will see in Nifty 100 index fund.
Correct.
Okay, alpha is limited. Okay,
Yeah.
but our main job is to preserve the capital, not take risky bets,
Right.
because at the end of the day the pension holders need their money back. We cannot make random strategies and blow up the money, right?
Right.
So, and our investment horizon is very long, almost 15-20 years minimum. So it's
Yeah.
better, we don't do that much of churning. Okay, we just invest in good blue chip companies with good dividend paying capacity, and we keep invested in that. Okay, for the next 5-10 years. So a lot of it is in large cap, some of it in mid cap, and nothing in small cap.
Right.
And yeah, so and breaking into institutional money management, you can always reach out to me. I am going to share the link. Okay, reach out to me. If you have any kind of questions, you can schedule a call with me or send a question, and I'll definitely answer it. So this is the link. You can also share on your WhatsApp group, Prakash, so
Yeah. Yeah.
that
Sure.
people can. In this link, you will find everything, whatever you need to, and hopefully Prakash will share my LinkedIn profile as well. I keep sharing documents and you
Yeah.
know.
I already shared it. I think many people might have viewed your profile from past 2 days.
Yeah, so in that sense, I keep sharing institutional research that I get. So these are the direct reports I get from these institutions, and I keep reading it all throughout the day. So that is basically one of my job is to have a good understanding. So I always encourage people, and since I got the opportunity to share with other, I'll definitely keep sharing. So you might not get from a lot of people, and also I share it in my class while teaching at FPA, at my CFA classes. So I keep these discussions just to make those students ready as to how to change their thinking into what they're studying in the curriculum or what in theory, and how do they analyze the market in real. So that
Right.
in the classroom we discuss a lot of things on markets, on the economy, so that they are ready after clearing CFA, that they would land up in a good front office role, be it investment banking or asset management. And any questions if you would like to have, I'll open the floor for questions. So you can ask me, and I'll answer it.
Yeah, I think Dhwani had sent a message on the chat. Her question is basically, there are so many news popping up in the market on everyday basis. How do we keep up ourselves updated with everything?
So basically, you just watch. See, you don't need to follow everything. Keep a track of interest rates. Keep a track of how major market indices are moving. Keep a track of what commodities are doing. Keep a track of what the central bank is doing. There are a couple of website I'll share uh, once. I think I'll share it with Prakash, and it's all
Yeah,
public website.
right,
So you can keep a track of GDP inflation. You can subscribe to research reports from brokerage firms, ICICI, SBI. Okay, and you can start reading on that part. You can always reach out to the drive that I'm maintaining, and study reports based on that. But mostly follow the indices news, not so much only the major news is important, and rather try to study the major macro situations that is happening in the industry, any industry reports from brokerage houses, and lastly I would say keep a track of interest rates and what the central bank is trying to do. So that is the
right,
beginner part of it.
right. Like, have you come across any of like young folks who are like as a fresher made into buy side roles? or like previous work ex in IB or sell side roles is like a mandatory thing,
Directly buy side is tough.
right?
You need to have experience. So you have to have at least 3 to 5 years of experience in sell side. After that, you can get into the buy side role. But having said that, I would
Yeah,
honestly recommend people to get into a sell side role because it is much more dynamic than a buy side role. Sell side exposes you to a lot of experiences and work. The day to day job work that you have to do is very dynamic in sell side. So it's very important you know the sell side before you come to the buy side, because your most of the day to day interactions will happen with sell side people. So you
right,
have to know how they work and how they operate to be able to be a good buy side analyst or fund manager. So it's equally important to be on the sell side initially, just to know their modus operandi. Okay.
right. Also, another question like what's the like major difference between PF and NPS? So this question came across because last month I was traveling across some tier two cities, and in most of the tier two cities, the major aspiration of employment is basically government jobs
Hmm.
because they get a huge sum of amount in their retirement plans,
Hmm.
and which is already paid by the central government or the respective state governments. But
You're
when
talking
somebody
about
is in the
provident
private
fund and,
sector,
pension fund, right?
yeah, like the difference and like return risk expectations from
Provident fund is basically a fixed rate of return around 8 to 9% the government will give you. Okay.
right,
It goes into the EPFO, which the government uses, and it's locked in for around 15 years, right?
right,
Uh, NPS is basically your retirement planning, and the best part is about NPS is that they also invest the money in the markets. So
yeah,
in that EPFO, you are just lending your money to the government. That's it, and
right,
the government will pay you certain fixed rate of return tax free.
right,
Here you're giving the money to some institutions that will not only invest in bonds but also do active management of money, so that they try to generate maximum return possible, provided they can keep the capital safe. So in that
right,
case you would very well earn over 10% if you invest in an NPS, and both are like tax free basically. If you There are
understood.
certain conditions, but if I simplify it, both are basically tax free.
Mm. Yeah, and also NPS basically provides an lump sum plus annuity feature, which I don't think the PF provides.
Correct. So that is there, but that kicks in after 15 years, and 40% of it you have to keep in annuity, 60% you can withdraw tax free. So
Right.
that part is also there. Annuity you have to select. I think LIC is again the default option in annuity. So if you have
Yeah.
to take annuity, the money will come to us basically. So
Right.
from that you can also select how much would you like to make an annuity and how long will it continue. So the best part of NPS is only that the return differential. So 15 to 20 years, if you are getting 2 3% extra, and if you compound that, so it
Yeah.
will turn out to be a huge number.
Right. And like what is the like expense ratio of what does LIC make out of this?
In terms,
Do
oh,
they
we get a
charge?
management fee, so almost very negligible, 10 basis point, 0.10%. That's it.
So that is like cheaper than even mutual funds in
Yeah, yeah,
most cases.
because our AUM is huge, right? So
Mm.
0.10 on 4.5 lakh crore, you do the math. So
Yeah.
that is our main source of revenue. Of course, the NPS is much cheaper than mutual funds.
Right. And it also makes sense, right? Because even if I go into passive ETFs, even they are investing most of their funds into Nifty 50 or Nifty 100 indices, and even 25% of the corpus in NPS is also going back to the market. So
Correct.
it will like almost have beta of one.
Correct. And also, 5% will soon come into alternative investments like REITs, INVITs, gold, which EPF will won't provide. I
Right,
would say keep a balance between EPF. You don't have to choose either or. Keep a balanced portfolio. Some of it you do keep in EPF, before that gives you tax deduction benefit as well.
Yeah,
And whatever you are saving, if you are planning for long term, so it gives you a benefit of you are not being able to pay any kind of capital gain tax on NPS funds versus a mutual fund. Mutual
right,
fund you have to pay capital gain tax. NPS, it's all tax free.
right. And there's another question. Vinay, if you want to like mute yourself and ask yourself, that will also be great.
Okay, good evening. Good evening, sir.
I
Yeah, so my question is like, you have also worked as an investment banker earlier, right? So can you draw a comparison as to how your work-life balance looks like in both the fields?
Work life balance is tougher in investment banking versus of course government job. See, in this we don't even have laptops. Okay, we just go to the office. I think 7.5 max 8 hours of work. We close out our work and we, once we switch off, we switch off again till the time we go back to our office. There's nothing, no WhatsApp, no Zoom, no Teams, nothing. Okay, once you're out of office, you're literally out of office. So that's the good part of it. But again, so asset management industry in the initial years when you're in the learning phase, that's why I tell people to be on the sell side initially, because work life balance will be a little more tougher, or let's say a little more hectic, but that is good for you because you're trying to absorb as much as possible. Okay, because you are new, you are fresh. It is trying to extract as much knowledge as possible, make be it out of your manager or your director or your peers, right? So that is a buy side. The learning becomes less steep. Okay, it's more about your decisions and execution. Sell side, you get to learn a lot of things. Okay, every day is a new thing. And in some sell side roles also, if you are really good at it, I think you can make a good chunk of money by cracking deals, or making investments sell to the buy side. You can make a good chunk of money. So the upside potential is huge in sell side versus buy side. Buy side is more stable, but sell side has very good upside potential. Buy side starts becoming a little more little bit more boring. Okay, so initially I wouldn't recommend, because and you won't, you might feel that you're in the buy side, but your learning curve will start decreasing very soon. Okay, because that's why I always recommend people to be on the sell side. Work life balance will be more hectic, let's say 10-12 hours in minimum, along with a laptop, along with even working on maybe Saturdays, maybe. But just take it as this 2 to 3 years or 5 years as something you are trying to get as much information eventually to make yourself shine and come into the buy side.
Got it, got it. Thank you.
Yeah,
Also, like on a daily basis, like most of your job revolves around reading reports, right?
mostly, yeah, and taking decisions, basically which how much to invest in what company, and that's it.
And like can we get any kind of sneak peek into like how complicated models can get? Like say suppose if you're trying to make a decision, like how are the credit models or how are the valuation models?
So the best part of buy side is you don't have to do anything. You just take everything from the sell side. And
Okay,
if you're having any issue, if you want to understand you, I can straight away call the brokerage people from sell side and call them to our room and tell them to explain this company or this research or do this modeling for us. Our job is not to do any kind of modeling anymore. It's like the model is given to us. Now you
yeah,
decide what you want to do with this, if you want to buy or sell. Sounds
mm,
very easy, but actually that is the hardest part, because you have to be accountable for your decisions. If anything goes wrong,
yeah,
your life will be hell, basically. Okay, a lot of questions you have to answer. Why did you do this? Why did you do that? Because in every report we have to give signatures. So once you
right,
sign it, you are leaving a trail that every decisions you have made has been approved by you. So that
right,
is where the accountability kicks in. but you
right,
can always get information from the sell side people as and when you require. So they are always ready to come to our office at even in a day's notice. If I tell them to come in the evening, they'll come.
right,
So getting the information is not a problem. What you have to do with the information is more important.
right.
But on the
And
sell
like,
side, just to
yeah,
interrupt, on the sell side is where I learned a lot of my modelings when I was in investment banking and doing research based on that. Not much
right,
on this side, but that is has what helped me in order to read and understand the reports that is being sent to me now. Had I not done that, so this would have been
yeah,
very difficult for me to understand and analyze. So you'll not get that confidence that whether I should go with this decision or not. Only in the sell side that you build the confidence year after year that okay, this is how I'm going to do.
right.
Yeah.
Yeah, I was saying like how do these sell side brokerages usually make? I have read that usually they charge a brokerage if you accept their research thesis or something like that.
No, for institution it doesn't matter. They keep sending us for free and hoping to get
Yeah,
you know they don't even have to do business with us. Even if we give them one order in a
yeah,
day or in a week, I think
yeah,
that will equate to their 1 month of revenue from other people because the
right,
volume is huge. Okay,
right,
even if they get one order to buy 5,000 crores of shares in a day, okay,
right.
so they are done for their month. So, but so they don't have any kind of quid pro quo that you give us research only, then we'll give you trades. Nothing like that. They'll come and give it to you for free because they
Yeah.
want to do business with you. So even
No,
if
I
not
mean,
today, they'll keep on pushing you that at any time, even if they get one trade also, and they'll be good for the rest of the month.
no, I mean there are a lot of these brokerage houses, right? And
Correct.
you get reports from each one of them. So how do
Correct.
you go like we are going to execute with this dealer?
Oh, there are multiple dealers. There are multiple brokerages we deal with. There is not one. There may be 20, 30. So that is
Oh,
not the issue.
okay, understood. Any other questions, Akash, Dhwani? I think we are good to go. Thank you so much, Siddharth, for doing this. Really
Most
helpful.
welcome. Yeah,
Yeah, I think we have a group of almost 150, 200 people in that. I think 50 are CFA3 level candidates.
sure.
Yeah, so I think I'll share this recording with this to them and also your top meeting. So it will be really helpful for them as well.
Definitely. And
Yeah,
let's see, hoping to get in touch with anyone who requires help. And yeah, all the best
right.
to all of you. And hoping to have a word with you soon. So, and thanks for calling me. So I had a good, session with you all. So yeah, have a good afternoon. Bye bye.
Thank you so much.
Thanks.